Hi everyone, my name is Affaf and I work quite often with ACCA as an expert tutor for advanced audit and assurance. I've been teaching AAA for over 15 years now, so I'm going to make sure that the technical concepts that we outline in this video are explained in such a way that you can retain the knowledge and apply it to exam scenarios. We're going to use an extract from the study hub to look at the syllabus requirements. You can prepare this topic pretty much entirely from this video, as the content is going to incorporate insights from the examiner reports and the technical articles as well. Towards the end of the video, we'll learn how we can apply this knowledge to an exam question and ensure we get the available technical and professional skills marks. Now, using the work of others is covered in Chapter 10 of the Study Hub. We'll cover experts in this video and service organizations and internal audit in a separate one. Please ensure that you read through and understand the technical knowledge which is covered in Chapter 10. Additionally, I would highly recommend that you use the flashcards, quizzes, and revision questions that have been made available for each topic. Now, I found that these will help you reinforce critical concepts, which will make it easier for you to remember the important details. You can identify your knowledge gaps and track your progress over time. And when you attempt revision questions which simulate exam conditions, they'll help you build confidence and develop effective exam techniques, which are very, very critical for the AAA exam. Now, we'll start off with understanding two key terms. Management's expert is someone whose work is used by the client to help them in preparing the financial statements. So if you're listing ABC Co, then they would have used their own expert that we'll call the management expert to prepare the financial statements. So for example, in the application of IFRS 2, an expert might have been used to determine the fair value of share-based payments, or maybe an actuarial valuation for defined benefit liabilities under IAS 19. The idea is that they would have used these experts to reduce the chances of misstatements in the financial statements. The second term that you need to be comfortable with is an auditor's expert. An auditor's expert is someone whose work is going to be used by us as the auditors to gather sufficient appropriate evidence. So remember, management prepares their financial statements. That's their responsibility. They would have used an expert to reduce the chances of errors in the misstatements, and auditors experts have to work with us, or going to work with us to help us gather sufficient appropriate evidence. In the AAA exam question, you'll need to read the requirement and the question very carefully to see whether it is related to the management's expert or the auditor's expert, because you'll need to tailor your answer accordingly. We'll start off with the first part, which was the management's expert. Let's think of this like a story. You're the auditor and you know that the client has used an expert to determine the fair value of some complex financial instruments. As auditors, we need to decide whether I can trust that valuation, and if yes, what procedures I would need to perform on that valuation. We'll start with looking at 4 key factors that we have to evaluate to decide if we can use the work of the management's expert. So I'm not even talking about myself at the moment, right? I'm just going to audit their work. So we're going to evaluate if they have the experience and competence to do the work that they've done. So experience, resources, etc. We'll see if they're independent of the client. We'll evaluate whether they followed their own technical performance standards or any other relevant professional or industry requirements. We will also see if there was any monitoring done on the expert's work by the management. So step number 1 is, can we or should we be using their work? This is not a complete list, by the way, but this covers the key areas that we need to focus on in the AAA exam. Now, once we are happy with their competence, objectivity, technical standards, etc., we'll obtain an understanding of the expert's work. So we look at things like the scope of their work, the purpose that was communicated to them, etc. And finally, we're going to actually review the report that they gave to the management and audit that work, so to say. So in the AAA exam, this is the slide that we need to sort of apply to the scenarios. We're going to be looking at each of these in detail, but the purpose is the minute you see an exam requirement which says the work that we have to do on the management's expert, these are the areas that need to be linked to the scenario. So just remember this and we'll expand on these one by one. Now in AAA, it is not enough to simply write that we need to see if the management's expert is competent. We have to evaluate this in a bit more depth. So this is how this is different from AA. So when we're talking about evaluation, we have to talk about, so we'll go on to write that to evaluate the competence, we'll have to look at the level of expertise and experience of the management's expert. So if this is the very first time they're valuing the financial instruments, then I'm slightly concerned about their competence and might not want to use their work. When we talk about capability, we're basically looking at whether the expert has the resources and the time to carry out the work. So if the work was done in a hurry or in a rush because they were time pressured, or maybe if they did not have enough people to work on that, then that means that the valuation might not be very reliable. We also need to look at any ethical standards that the expert complies with, along with requirements of their own professional body or industry association. So remember, we're basically trying to look at how regulated their work was, not necessarily in terms of laws and regulations, but more of monitoring by their own professional body. In the exam, you will need to explain where this information can be gathered from, because the examiner normally expects you to do this. So we might have worked with the expert before. We can also discuss their experience with them. We should find out about the expert's qualification and memberships of their own professional body. We can look at any published papers or books written by the expert. All of this, by the way, can also be used to evaluate their objectivity that we're going to talk about next. So in the AAA exam, you can't simply write, we're going to evaluate their competence and capability. We'll have to explain what is on the screen right now. Plus, if there's any indication that any of this has been affected, you're going to link that to the scenario to get your professional skills marks. So when we use the word objectivity, so we know that we have to evaluate whether they worked objectively. The word objectivity basically means we're looking for any indications that the expert might have been biased in their work. So if the expert has, say, shares in the client or has a business relationship with the client, the report is likely to be unreliable. We will see if there are any safeguards that have been applied and if they seem sufficient. Remember, threats to independence would be greater if the management's expert has been engaged from within the firm rather than externally. So the management could say that we have our own department who's an employee who's done the work, and in that case, their objectivity would be slightly less reliable. Now, we can also look at the controls that the client has applied over the expert's work. Remember, they're paying the money, so they wouldn't have just left them on their own. They would have been monitoring their expert's work as well. Now, after evaluating the expert's competence and independence, we now need to decide whether we can use their work. Now, we'll start off with reviewing their engagement letter or any other written form of agreement between the client and that expert if it exists. Like I said earlier, this is going to help you evaluate what the expert was asked to do, the form of that report, etc. So we're going to look at that engagement letter between our client and the expert. Now, this is where we're going to get quite a few technical and professional skills marks. We're now going to get the expert's report and perform procedures on it, because we can't blindly believe whatever the report says simply because the expert is skilled and objective. So just very sequentially, what have we done up till now? We started off with evaluating can we, and we looked at competence, capabilities, professional standards, etc., and their objectivity, of course. If yes, then we asked for the engagement letter if one existed between the management and the expert. The idea was to find out what work was communicated to the expert, etc. And we've now actually asked for a copy of the actual report. So whatever the findings are, we are going to review those findings. So you can use what you see on the screen as a checklist to make sure that you don't miss anything while evaluating the scenario. So with regards to the expert's conclusion in the report, we need to see that this is consistent with any other audit evidence that we have and whether this has been appropriately shown in the financial statements. For any significant assumptions that have been used, we need to check that the assumption was reasonable. So we can do this by gathering other evidence. For example, say the expert's report was on fair value of buildings. We can actually get corroborative evidence by comparing it with market research results of similar buildings in that area. Source data is the underlying information that the report was created from. We need to check that the data is relevant, complete, and accurate. And after all of this, you're pretty much okay to say that based on all this evaluation, we can actually say that the fair value has been determined correctly. So the idea is, and this is where we finish off the management's expert, in AAA exams, they're going to give you a mini scenario and they're going to ask you to explain the audit work that's going to be done on the management's expert's work. So again, relying on the work of an expert. So we know now that auditors might be using their own experts as well. A few things that you need to remember is that the expert can be internal from the auditor's own firm or a network firm, or it could be an external party as well. In all cases, the auditor is going to have the sole responsibility for the audit opinion. This cannot be reduced simply because we used an expert on our own. So this basically means if there's a negligence lawsuit later on, we can't say it isn't us who messed up, it was our expert. Similar to what we learned earlier, before we rely on the work of our own expert, we need to consider their competence, objectivity, and capability. What's slightly different is that because we are appointing them, we will need to agree several matters with them in writing before they start their work. Once they've prepared their report, we're going to evaluate that their work is adequate, exactly the same way that we did for the management's expert. So there's very little additional knowledge that we need to retain here. It's pretty much the same that we did for management's expert. Now, we'll evaluate their competence, capabilities, and objectivity exactly the same way that we did for the management's expert. So you can write all of that down here in the exam as well. So the industry experience, their license to practice, their quality standards, etc. But remember, we are appointing the expert this time. So we need to ask them if they have any interests and relationships with our client which could affect their ability to be unbiased. So for example, if they provide other services to our client, this basically may affect their objectivity. We can also get them to write all of this for us in the form of a written representation. Now, as we are appointing the expert ourselves, we are the ones who have to agree the terms of the engagement. We therefore need to have a written agreement with them that outlines the work that they're going to do and the purpose that the work is being done for, etc. Our responsibilities will also be clarified along with theirs, and any communication between us is going to be outlined, including the form of any expert report that we're going to be giving. Remember, this is the same content that we did for the management, so there's nothing additional here as of now. The extra important additional point is regarding the confidentiality one. Remember, the confidentiality provisions that apply to us as auditors under the Code of Ethics also apply to the auditor's expert. So we need to agree with this with them in writing so that they know that they'll have to sort of comply with the confidentiality requirements as well. So whatever information they have, they can't share with unauthorized parties. We'll look at the conclusions in their report. So for example, maybe we have hired our expert to determine the fair value of the building. So the management had gotten their fair valuation done by someone within the organization. I wasn't happy with that. I wasn't willing to rely on their work. So I'm getting the valuation done myself. Now we need to carry out procedures to sort of corroborate or support their findings. Whatever they have written in the report, so we're talking about the auditor's expert, whatever our expert has written in our report, we can match it to any published data like results of market research. Depending on which area they have given their report on, we can carry out other procedures which could include observation, analytical procedures, recalculation, etc. We'll also review that the findings are based on an appropriate time period and obviously take into account any subsequent events which might be relevant. So anything that has happened after the year which might give us more indication about the valuation that has been done by our expert. Now, if the expert's work involves significant assumptions and methods, we need to see if they are reasonable. Now, one thing that I hope you're clear on from your knowledge of audits of accounting estimates is that when auditors are auditing areas in the financial statements which require estimation, we have to do two things. We have to see if the management's assumptions are reasonable, but then we also have to develop our own estimate and match it to the management's estimate. So for example, in the fair value of buildings, say the management has already gotten a valuation done, we need to evaluate their assumptions and we also have to compare it with our own estimates, which we might simply get directly or use an expert for. Now, to evaluate the assumptions and methodology in the report, we're going to see if they have used generally accepted principles within their own field. We're going to evaluate whether whatever assumptions and methods they have used are acceptable within the relevant accounting standards. And we will also look at whether the assumptions and methodology was the same as the one used by the management. And if it's different, we'll have to find out why. Now, as discussed before, source data is the information that was used in the report, basically about which the assumptions were made. So, for our example of building valuation, the source data would be the buildings that were actually valued. We need to test that the data that they used in the report is reliable, complete, etc. We need to understand the internal controls over that data. We might actually end up testing those controls as well, and we'll also see how that source data was communicated to our expert. Now, very important to remember and keep in mind, we've already spoken about this, that even if we've used our own expert, the ultimate responsibility of the opinion stays with the auditor. So if we're giving an unmodified opinion, we cannot refer to the fact that we've used an auditor's expert unless it is required by local law. However, if the reasons for the modified opinion are linked to the work of an expert, we can mention this in our audit report, but we do have to clarify that the sole responsibility of the audit opinion is still ours. So we've pretty much covered both the areas. In both areas, be it relying on the work of a management's expert or that of the auditor's expert, we do have to look at competence, capabilities, their professional standards, their objectivity. We do have to actually get the report in which the valuation was done in my example and evaluate the assumptions, the methods, the conclusion, the source data. So it pretty much remains the same. The only difference is when we are talking about the auditor's expert in the AAA exam question, we have to keep in mind there are additional elements because we will be the ones agreeing the terms with the expert. We're going to have a look at an example, which is a very, very good example because it's not entirely straightforward. We're going to look at how this has been combined with procedures and we can bring the two together to come up with a very good answer for about 11 marks. So you're the audit manager responsible for the audit of Poppy Co., which is a manufacturing company with the year ended 31st October. In the last year, several investment properties have been purchased. So please remember, this is a new purchase during the year to utilize extra funds and to provide rental income. The properties have been revalued at the year end in accordance with IS 40. They are recognized on the statement of financial position at a fair value of 8 million. The total assets are 160 million and external valuer has been used to provide the fair value of each property. Now over here, it is important to pick up that the client has used an external valuer to determine the fair value of each property. So we're talking about the management's expert. The requirement is, again, this is slightly more specific. We have to recommend the inquiries that are going to be made from the external valuer before we place reliance on their work. So what inquiries, what questions are you going to be asking them? And we need to describe the principal audit procedures that are going to be performed on the valuation of investment properties. So it is a combination of your auditing procedures and relying on work of others. Now, we know, and this is what we've covered in the video as well, that we need to speak about their competence and objectivity before we decide whether we can rely on their work. So some examples of inquiries could be, we want to find out if the valuer is a member of a recognized professional body, for example, recognized Institute of Registered Surveyors, and if yes, how long has it been? So how long have they been members for? We can inquire if the valuer has any necessary license to carry out the valuation for companies, and if yes, again, how long have they had the license for? Is there any evidence of the reputation of the valuer? So the inquiry could sort of revolve around any professional references, any recommendations from other companies for which a valuation service was also provided. We need to inquire about the experience that the valuer has in providing valuation of this particular type of investment properties which are held by Poppy. We need to see if the valuer has specific experience of evaluating properties for the purpose of finding their fair value within the financial statements. And if yes, again, how long has that experience been and have they worked with Poppy before at any point in time? With regards to their objectivity, the inquiry could be around any financial interest that they have in Poppy. For example, any shares that they hold directly or indirectly in the company. We can inquire about any personal relationships that they may have with any director or senior employees of the company. We can also inquire about the fee paid because we basically want to evaluate that it's a reasonable, fair, market-based price, because see, if they've been paid a lot of extra amount, then they might not be unbiased in their work. So as you outline your answer for the first part, these are the areas that you need to link to the scenario. There's not much linkage involved. All I did was, when I was explaining my points, I was referring to valuation of investment properties, but the main answers remained the same. The second part was the important one because we also had to talk about the fair value, and this is where my assumptions and my additional procedures will come up. So we're now going to be evaluating their work. We've done the before reliance elements. We're now going to be going on to procedures. So remember, for procedures, the rule is that you have to cover the what and the why. So what is the source document and what are you looking for in the source document to get the first 1 mark each? So we could, to start off with, I want a copy of the written instructions that were given by Poppy to the valuer, because I want to know the scope of the work. So which scope means what they're going to be working on, what the objective was, were they communicated the purpose of the work, and whether they were given access to all relevant records and files. So starting off with, I want to see that written instructions between the client and their expert. This is where quite a few marks are going to start coming in. I'm now going to get a copy of the report where the valuation was done, which showed the fair value of the investment property. I need to evaluate the assumptions are in line with our understanding of the client. I want to see that the methodology that they use to come to the fair value is consistent with the one that is required or allowed by the reporting framework. I need to make sure that for each investment property, the method of valuation has been the same. I need to check the date of the valuation to see how close it is to the year end. I can physically inspect the investment properties not to confirm their existence. So if you write existence, that's a 0 because procedures are on the fair value of investment properties. So I can physically inspect the properties to determine their condition because that might give us indication about their valuation. We can look at the purchase documentation to confirm the cost. And why are we doing this for this example? Because these properties were purchased during the year, the cost should be quite close to the fair value. So if there's a significant difference, then I could actually say that the fair value has not been determined correctly. I could be looking at forecasts of rental income because they would give us supporting evidence regarding valuation. I can also review any events after the year end because they might give us additional evidence regarding the valuation of the property. So for example, if there was a sale shortly after the year end, you can find out how much it was sold for. That'll give you a fair idea about the fair value's appropriateness. And finally, and remember this is weaker evidence, so it's going to be there towards the end for me, I can get a written representation from the management regarding the assumptions that they are reasonable and they've given all the relevant disclosures, etc. We can, by the way, also review the disclosures to make sure they're adequate and complete. So this was a summarized version of, to be honest, the entire content that you need to know for relying on the work of experts. Like I said at the start of the video, there's not much else that you need to know for AAA exam questions. So I would recommend that you make a note of the key points that we outlined and apply them to the questions on practice platform. After you've attempted the questions, please do read the solution so that you can evaluate your answers, and you'll also get the comfort that you've covered pretty much everything that is written in the standard solution as well.